I started this whole money lore thing because money is funny right now. Currencies are being invented by TikTokers, Pokemon cards are a type of retirement strategy, and stock options are a video game. This world of digital money innovation is a blast, and that's why I threw myself into it. And if you dive right smack dab in the middle of this digital money evolution revolution, one thing you'll find is the fintech battle for glory. There are many fighting the good fight amidst the fintech war, but one of the most rapidly rising, unstoppable champions is Jack Dorsey's financial wonder. The one product underdog turned multi-billion-dollar financial and crypto beast. This is the Square story. Square Incorporated is, in the simplest possible terms, a financial services company based in America co-founded by Mr. Jack Dorsey and Jim McKelvey. But in more complicated terms, Square is a future-first financial technology brand focused on innovation in and around the world of digital payment and money. From credit card processing to point-of-sale infrastructure to business management digitization to e-commerce management, peer-to-peer payment to investment brokerage to crypto player to digital reward system and soon to be modern bank. Square is, or is planning to be, an everything financial innovative giant. Square is a beast with a 2021 market cap of over $120 billion. Square is a great many things, folks. But here's the thing about that. To become a thing that is a great many things, one must first be one thing. And early on in the running, Square was a seemingly silly idea. At a time when PayPal was the internet money company of the space and payment processing was not exactly an inviting world for competition, this untapped fintech war was ridiculous, ludicrous, madness to want to be a part of. But the young, ambitious, and oh so bold Jack Dorsey was in the game of ludicrous business competition in the world of technology. For this was the year following Dorsey's other passionate tech innovation. You may have heard of it. That one would be Twitter. Well, folks, if you will, immerse yourself. The year is 2009. Jack Dorsey is a young, fresh, fly and spry tech millionaire that has just been replaced as CEO of Twitter. Word on the street is he was booted from the big position for too often leaving work early to take up yoga and fashion design. Whatever the case, Dorsey's credibility was proven at this point as Twitter was a rapidly growing success story already. Dorsey was a Silicon Valley hotshot. So in 2009, when Jack's buddy old pal Jim McKelvey was having a dreadful little time in the need of innovation, he remembered his buddy, Jackie D. Jim was struggling, trying to efficiently complete a $2,000 sale for new glass faucets and fittings, because he had no way to accept credit cards easily at this point. More specifically, Jimmy McKelvey was a man of glass. Not made of glass, but he owned a glass-blowing studio small business in the St. Louis area. At this time, it was a struggle. The choice of whether to have a credit card machine with an intense system behind it that took all cards but charged a big fat varying fee, or to go for a simple card processing option that only accepted a few cards, forcing him to bid farewell to many sightings of potential cash money. Well, Mr. Jim McKelvey reached out to his old buddy Jackie D to tell him about this classic small biz struggle. Dorsey saw new opportunity before his eyes. Jack decided he needed to invent cheaper glass faucets to solve this issue once and for all. No, it was a money thing. It wasn't faucets. I did a joke. That was just a classic joke right there. Anyway, Jack Dorsey put 2 and 2 together. It equaled 4. And then he started working on something even cooler than that basic math. He realized that most folks those days were starting to purchase Apple's brand spanking new iPhone. And looking at it broadly, this was a product that had all the elements, plus many more, of a traditional credit card payment processor. A screen, access to transaction history, the ability to sign with touch, plus it was sleek. So these two wild boys formed a little team to create what became the famous, the original Square Reader. A teensy little device that pops into the headphone jack on an iPhone. This sucker connected with the Square app and all of a sudden made the credit card magic happen easier and sleeker than ever before. Plus, the real kicker was Square's sexy, minimal payment fee structure. Remember the time. Beforehand, these high-end, bulky card readers were expensive, ugly, plus the fee structures were complicated, varying, and generally high, all filled with hidden fees and whatnot. But Square was here to keep it simple. The Square reader would be shipped out for free to whoever ordered it. Then as a fee structure, it was a flat 2.75% plus 15 cents per transaction. No hidden fees, no variation depending on cards, costs, etc., etc. Just that simplicity. And with that, they even shortly after decided to drop the 15-cent portion of the funds. So Square payment fees evolved to become a smooth, simple 2.75%. No need to get fancy with it. And so, now the fun begins. Dorsey and McKelvey launched this juicy new company officially in early 2009 amidst the Great Recession. They rapidly develop a workable product and start on the path to funding. And, well, if you can imagine this, they did not have a difficult time funding at all. Within days of creating the initial product, they established deals and relationships with payment processors and banks so that Square will be able to act as an intermediary, sort of like PayPal, but also not really. Across the next few months, Jack and Jim harnessed those juicy friendships, raised a total of $10 million in Series A funding, and continued along the path of evolution. In December of 2009, it was time to chat to the world a bit. So Jack Dorsey set up a conventional press conference to announce the specifics of the anticipated Square launch. Oh, well, actually, Jack unconventionally announces the official launch of their new company in a 99-character tweet on December 1st, 2009. Now that's Jack Dorsey, baby. And so, we take off with a bang. From there, sailing was smooth, fast, and intense. Let's hit some quick and slick timeline moments to dive and thrive to. Dorsey announces the official Square website in December 2009 to showcase Square's first official product, the Square Reader. You know the one, it's square-shaped. Square goes into a sexy exclusive little private pilot run limited to just 50,000 folks until November of 2010 when the door is officially opened for the regulars of the world. Growth goes into rapid mode. That's growth. May of 2011 comes along and Square drops two new technological bangers. The release of their new apps, Square Card Case, eventually to become Square Wallet, and Square Register, their state-of-the-art point-of-sale register system. Square's growth is so intense, Jack Dorsey buys himself a new house. Also, by 2011, 50,000 readers are shipped across the US, amounting to a vast $66 million processed. The hype is real. Square is spreading, and folks, we're changing the game for small businesses. Do you understand this? I mean, 2021 is a technological dreamscape, but picture it like this. In fact, immerse yourself and imagine the impact Square is having on the world at this moment in history. Meet John Velez. John opened up a little towing company called Norwalk Towing over in Southwest Connecticut in 2008. The name of the game for John is dealing with folks that had no intention of dealing with John that given day. You don't get in your car expecting to have to do business with a tow truck upon your trip. No. So, upon experimentation, John tried accepting cash only, as that was the only thing one could do. But oftentimes, folks didn't have the cash. Checks were another idea, but even then, who in the heck has their checkbook on them casually? So to stand out from competition, John started accepting credit card payments. A rare thing in the game of tow trucks at this point in time. In the early days of this move, John would have to write down credit card numbers on a piece of paper, then process them later once he got back to his office. And of course, things can go wrong at that point. As John puts it, sometimes 5s looked like 3s or cards were declined. Fixing these issues often took weeks upon weeks. Well, in time, John found Square. The sleek, 1-inch little credit card reader that just pops into his phone to process these payments on the fly. This was a goddamn game changer for John Velez, as it was for a great many small businesses in similar situations. But here's the real kicker. In 2011 and beyond, word got pushed past small businesses. Big name brands were switching over to Square options because it was becoming the cooler, modern way of doing business. Between the Square readers and the hot new Square registers, I mean, come on. People want to live in the future, man. Don't let them get held back at the checkout counter. But smooth sailing often leads to rough waters. And that's just what came in March of 2012. PayPal saw this sector within this thriving fintech space that it once formulated and founded upon. PayPal didn't like what they were seeing one bit. So in March, here comes PayPal with their latest and greatest innovation, PayPal Here. An attachment for your mobile device to process credit card payments in the shape of, wait for it, a triangle. And in response to Square's beloved simplified 2.75% processing fee, PayPal Here announced a simplified 2.7% processing fee for their triangle dongle. This right here is the cruel world of the free market, folks. Or the cool world of the flea market, depending on your perspective, of course. Well, the heat was on now. Square has competition in the water, and it just so happens to be the biggest fintech player in the world. Different businesses are going in different directions here in our 2012 world. These two options are becoming the leading players, but it's definitely a cutthroat battle for business. That is, until the table is turned. In August of 2012, the announcement comes upon us that Starbucks is investing $25 million into Square's business and that Square will become their exclusive payment processor of debit and credit card payments from this point forward. Boom, baby! Eat that, PayPal! Put that in your goddamn macchiato and choke on it! Sorry, we're getting a little excited here. Well, this deal definitely brought the light of glory right on back to Square. And the fun continued. In early 2013, Square drops the reveal of the Square Stand, the fancy little device that turns the iPad into a complete point-of-sale system, quick and easy. In late May of 2013, Square drops another banger on the world, the reveal of Square Cash, which would eventually rebrand itself as simply Cash App. A real deal, simple, peer-to-peer money-sending app. A month later, Square launches Square Market, which lets sellers of the world create a free online storefront with online payment processing connected through directly to their brick-and-mortar setup. These new innovation drops are rocking us back and forth. This Square company is wild, man. And the numbers within this wild time, you ask? By 2013, Square was processing $15 billion per year. That's billion with a B. B as in Bob. Bob as in Robert. Am I making myself clear here? A few short months later, Square had yet another big boom to drop on the fintech world. In March of 2014, they announced that they'll start allowing their sellers to accept Bitcoin on their own storefronts through Square Market if they so desire. A big Bitcoin move in 2014? I mean, in case you don't realize it, that's a big, bold move for a massive growth company to do at this point. Bitcoin was not even close to what it is today, but they saw the potential. Then, in May of 2014, K-pop star Psy's global hit Gangnam Style becomes the first video to ever reach 2 billion views on YouTube. I mean, that's a lot of views. But also, maybe more importantly, Square launches a legendary underappreciated aspect of their business called Square Capital, an option that offers financing to merchants using Square. I mean, do you see this rapidly expanding road that Square is on? This is a game of owning the verticals and the horizontals in this fintech developing world. This is what a thriver of a growth company looks like, folks. The competition made the water scary briefly, but Square overcame and thrived because of it. There were a lot of smiling faces at this point in time, and a lot of cartoon dollar signs within their eyes. This is what happens when business goes well. It's basic science. And do you know what happens when your tech startup hits massive growth and the large dollar signs grow even larger and larger and larger within the eyes? Well, of course, you take that thriver to Wall Street and you launch that sucker on the public market immediately. And on November 19th, 2015, that day came. Jack Dorsey welcomed a celebratory morning alongside his mother, as Square officially went public on the New York Stock Exchange. How precious. Square IPO'd at $9 a share, hit $11 by opening bell, peaked about $15 midday, and settled things off at about $13 a share. After all the madness, all the hype, the brief struggle, and a preliminary large span of doubt prior to it, the Square IPO was a glowing success, and Jack Dorsey's mom was in fact proud. But while this may seem like the happily ever after moment in our tale, it is not exactly that. IPO day was an uplifting turn of events, but in the days, weeks, and months to follow, the smiles soured. The happiness began to wane. It took about 60 days, but at that point, Square's stock price fell below IPO pricing, disappointing investors heavily. The stock price continued on a dismal, downward path for about a year. Earnings were disappointing analysts, harsh news was coming out left and right, fear-mongering, if you can imagine. Folks talking up how the world was wrong to be hyped over this fintech potential, etc., etc. When passion starts to wane at signs of weakness, those that feed off of negativity thrive. Shout out to my fellow Tesla investors out there who've suffered alongside me. Well, in due time, Square started to turn things around towards the later half of 2016. Square's EBITDA turned positive for the last 3 quarters of 2016, with strong profit margin growth going down in the 4th quarter, especially. But press is still pretty mixed at this point. The naysayers were certainly saying nay, and boy were they enjoying it. And as it turns out, in 2017, these naysayers, well, they got the chance to take a nice long look in the mirror because Square was back, baby. They expanded rapidly in 2017, growing with incredible earnings, massive moves by the company, continued evolution, and huge user growth. Square Capital in particular was an explosion of success, and Square was finally making big moves in the UK and beyond. Square went on to have a couple of cute little hiccups, mostly following the tech broader market, but for the most part, these suckers were absolutely killing it from 2017 onward and onward. I mean, let the chart speak for me on that one. Like most things in the world, Square had its biggest and darkest fall at the forefront of the pandemic, jumping from about $83 a share in February to about $38 a share in the valleys of March. But the beautiful thing about Square is they took up the opportunity to make massive moves in 2020 following the chaos. They had already had juicy things going on in the world of e-com, but friends, they were a brand that thrived in this environment of brick and mortar stores needing to quickly adapt to the online world. They made massive moves in their vertical sector of e-com, and that, along with the continuous rising popularity of Cash App, amounted to absolutely ferocious growth across the last year and a half. That, and, well, of course, the beautiful brave move many of us know Square made in October of 2020. You know, buying 4,700 Bitcoin with the cash on their balance sheet. By the end of 2020, Square held about 5% of their total assets in Bitcoin, and this year, they bought even more. So suffice to say, it's been a very profitable year beyond the core business as well. And as for our forward-looking perspective, in terms of this crypto interest Square has going on, they bought Tidal earlier this year. You know, Jay-Z's music streaming platform that no one cares about. Well, the talk of the town says that it's the idea of implementing NFTs with Tidal, along these lines of passionate music fans buying unique ownership of albums through the Ethereum blockchain. Well, that idea, that certainly sounds like the future forward Square we've seen exist over these last 12 years. So that there, along with everything else, is very interesting. Ladies and gentlemen, Square is a beast. They were once threatened by and often belittled in the media about the classic behemoths of the financial world and how they'll never compete, but it seems Square has itself become a behemoth in the financial technology world. And as a fan of innovation in any form, I very much enjoy this tale. TLDR. Jack Dorsey's friends sold glass, but some glass was too hard to sell because credit card processors sucked, and Jack's problem-solving, tech-first outlook on life amounted itself well to establishing a game-changing financial play that would go on to evolve itself into all sorts of juicy forms to change and improve the world of finance, sales, and commerce in general. And that there is my take on the story of Square. If you're interested in seeing more stories like this, I do these money lore things on all sorts of fun stories in the world of money, scandals, scams, business tales, crypto madness, short squeezes, wild moments in money history, etc., etc. So go check them out. Also, feel free to drop a fat comment, a like, maybe even a subscribe my way if you're feeling spontaneous. If you're looking into signing up for stock brokerages, crypto brokerages, or any other money app, check the description of this video. I try to keep them up to date with whatever deal I can get you to earn yourself some free money when you sign up, so go check those links. I keep them updated. Claim them if you wanna. You know the deal, you know the deal. All right, enough jabbering already. Let's get out of here. Thank you so much for watching my video. I'll see you real soon. Be safe out there.